The 120th Congress is in session for the 2025-26 cohort in the Downpayment Toward Equity Act, a bill to give eligible homebuyers up to $25,000 in cash grants to buy their first home. Continues to generate interest. Let's learn more. I'm Dan with homebuyer.com. My MLS 227607. Our lender MLS 423065. We're part of Novus Home Mortgage, a division of Exonia Bank. You can read more about homebuyer.com in the video's description, including our lending coverage and some very important disclaimers. Also, don't forget to hit the subscribe button. This channel is full of excellent homebuyer education, which of course is different from legal, tax, and financial advice, which you can better find somewhere else. I'm not a lawyer. This is a mortgage video. And when you're ready to check your eligibility to get your mortgage pre-approved, you can do that online in about 3 minutes for eligible buyers at homebuyer.com/fast. Okay, this video is about the Downpayment Toward Equity Act. It is a bill that was introduced in the last Congress, the 119th, and also in the Congress before that, the 118th, because that's what lawmakers sometimes do. When bills they sponsor don't get passed or don't get brought to a vote, they bring those bills back in the subsequent congressional session. And here, it's possible that we'll see that again because the sponsors of the Downpayment Toward Equity Act from the 119th Congress, the last one, there were Senator Raphael Warnock of Georgia and Representative Maxine Waters of California's 43rd District, both of whom are still serving the nation. So we'll talk about this bill and discuss its benefits as we expect them to be written, if they're written, based on prior versions of the bill. But none of this should be taken as the bill is already passed because it's not. This is a bill that we're discussing, and not all bills pass into law, and bills often change on the way to becoming law. Now, the Downpayment Toward Equity Act is a very different type of homebuyer bill because it is not a tax refund or a tax credit, and it is decidedly a social benefit program. It's right there in the language, a carefully written opening paragraph in the bill that reads, "The Downpayment Toward Equity Act is a bill to provide down payment assistance to first-generation homebuyers to address multi-generation inequities in access to homeownership and to narrow and ultimately close the racial homeownership gap in the United States and for other purposes." Paraphrasing, this bill gives first-time buyers cash to help close wealth and homeownership gaps linked to family history, to race, and to opportunity nationwide. That was the Down Payment Act and what it's for. It gives first-time, first-generation homebuyers up to $25,000 based on the qualifications as a cash grant to buy their first home. It is not a loan, it's not a mortgage, it's a cash grant to be used for any expenditure related to buying a home, for a down payment, for closing costs, for loan fees, for buying down a mortgage rate, anything that's listed on a settlement statement when you buy your first home. And the eligibility standards to get the cash grant are straightforward. There are 5 of them. First, the Downpayment Toward Equity Act is for first-time buyers only, which, according to the bill, is any person who has been a renter for the past 3 years, for 36 months. That means you could have owned a home more than 3 years ago. That would be fine, just not in the last 3 years. So by the definition, you can be buying a home for the second time in your life and still be a first-time homebuyer. Strange, but true. And there are exceptions that qualify more people. For example, if you are a single parent who used to own a home when you were married, but you haven't owned one since your marriage ended, you are considered a first-time homebuyer. Or if your home for the last 3 years wasn't permanently moored, it's like a mobile home or a trailer, or if your current home is out of code and it would cost more to fix your home than to rebuild it, you're a first-time homebuyer. Most people, though, they're renters and they have been for the last 3 years, and that is the most common definition of a first-time buyer. If any of those examples fit you, congratulations, you just met the first of 5 eligibility standards. The second, the Downpayment Toward Equity Act is for first-generation homebuyers only, and this definition also, first generation, may not mean what you think it means. According to the bill's language, a first-generation homebuyer is any person whose parents or guardians have not owned a home in the last 3 years, just the last 3 years. So if your parents owned a home when you were younger and today they rent or live in assisted housing or have passed, the Downpayment Toward Equity Act considers you a first-generation homebuyer. The bill makes exceptions here. If at any point in your life, if you lived in foster care, regardless of your parents' or guardians' homeownership history, you are eligible as a first-generation buyer too. Now, common question, how will the government know if my parents owned a home or not? And the answer is, they ask you. So when you go for your mortgage and you ask for the grant, you'll be asked to complete a form and a test under penalty of law that the information you provided is truthful and accurate, that you are in fact a first-generation buyer, and that will be your proof that you meet the grant's second standard. The third standard is income-based. The Downpayment Toward Equity Act is for low and moderate income earning households only. This means if your income is within 120% of the typical household income for your area, you can claim the grant. If your area median income is $100,000, eligible buyers can earn up to $120,000. But for buyers in high-cost areas, places like Los Angeles, Boston, Manhattan, and Brooklyn, in those areas, eligible buyers can earn up to 180% of the typical household income, and that is a pretty wide berth. Fourth, to get your cash grant, you must use a government-backed mortgage, which 96% of people do. Government-backed mortgages, they're conventional loans through Fannie Mae or Freddie Mac. They're FHA insured loans, USDA, VA loans. Using a personal loan to buy a home or a private mortgage or some other non-government program is not allowed. Government-backed only. And last, the fifth standard, which is more of a requirement, all buyers using the Downpayment Toward Equity program must attend an approved homeownership class, either online or in person prior to closing. Courses are often available online. Some are free, such as those offered through Fannie Mae and Freddie Mac, but availability may vary. Courses like these are also proven to reduce the likelihood of foreclosure, so this one is actually good for you. And that's it. That's the 5 requirements. The Downpayment Toward Equity Act is an inclusive first-time buyer program that gives a true cash grant, $25,000 paid as cash that buyers can use for anything related to the purchase. And after 5 years, provided you've kept your home as your main residence, the grant closes out, no payments due to the state, the government, or to your lender. And you can get updates on the bill when we post them. Subscribe to the channel, hit the bell, and you'll be notified of new posts. I'm Dan with homebuyer.com. Remember, pre-approved buyers do better. Happy home buying.